would say that that benefit has actually maybe improved over time. What changes have you seen with the Veterans Administration home loan that have maybe progressed over the time? You know, it's still a little bit of an old school product, but it is, you know, for us, it's about 30 days, it's about 30 years evolved since we first got into the industry. What have you seen change within the program, and what benefits does that provide to the parties involved?
Well, I think first of all, a beautiful benefit of the VA loan is if you have any sort of disability with the VA, even a 10% disability with the VA, that the funding fee for the loan is waived for the veteran. And that's a really big deal, because that funding fee can be, the first time use, of 1.6%, or a subsequent use is higher. So being able to waive that funding fee altogether is a very big deal for the veteran. So that's something that I think people overlook sometimes. The other thing that I think has been a big, beautiful change is that the debt-to-income ratios for the veteran are more make sense than they've ever been. Really meaning, if you take debt-to-income ratio, when I'm talking about that, it's taking your obligations on a monthly basis, including the mortgage with taxes and insurance, and dividing it by your gross monthly income. And if that number used to be, they would try to keep it in that 45% range or better. And we've seen those be pushed a little bit lately, 50, even 55%. Because if it makes sense, if there's good compensating factors, then our underwriters are amazing, and they really work hard to get that veteran into a home. So I think those are some big changes. The credit score has been lowered a little bit, so we can do a little bit better. More inclusive of veterans that don't have maybe the highest credit score. So we're seeing those in the 580 range, even 600 range, but and sometimes a little bit better depending on the compensating factors for the veteran. So that's been a big change. I think the most exciting thing in the VA loan is that there's been a misinterpretation of the amount that a seller can pay on behalf of a veteran, and really it's been misconstrued through the years. We've always heard that the seller can pay 4% of the veterans' closing costs, but really it's 4% of the allowable closing costs. So that would include maybe paying for their funding fee, or actually paying off debt for the veteran to help them qualify. That's huge, absolutely huge.